And let's take a quick look. What's going on? Well, it's pretty flat. And news-wise, let's look at right into the market movers. Not much going on right now yet. So we can jump into today's bonds little change. The S&P 500 is little change. So the rising bond yield keep investor on the edge. Yeah, so look at that. The market is just pretty flat right now. Let's take a look. This market open. Jobless claims stay extremely. Let's let that load up first. So like the market's just flat. Low at 204,000 with no signs of rising unemployment. Okay, so that's in check. That's okay. And just no surprises. So the market have nothing to trade on to make a move. U.S. economy grew 2.1% in second quarter. These are backward looking. So that's that. Yeah, 2% growth. Hey, that's pretty decent considering where we're coming from. Trading heavily in depth, Evergrande suspended in Hong Kong. Yeah, that's in the past. That stock is nothing now. The whole company is nothing. Right? That's what happens when you overexpand and you lever too much. Eventually, you implode. Right? That's basically what happened to that company. Anyhow, so let's go to trading view, products charts. Basically, everything is just Wix is flat. Everything is flat. Nothing much going on. So let's go to what I want to talk about today. Actually, so in actuality, yesterday I opened the level 2 trade on the Donchian channel NATR indicator. That's my level 2 trade. So what is taking place is actually that on the daily on XLE, which is a Standard & Poor's Select Sector Fund on energy sector. It had been trending, basically. It's been trending since late June. So it's been trending for 3 months on the uptrend on the daily. Right. Very clear. 1, sideways, 2, sideways, 3, sideways, came back below the mid of Donchian channel, right? And then it spikes back up. Right? Very clear false hammer here. Right? Over here, although we don't have a false hammer, but this signifies kind of like that, a big bar and then indecision, and then yesterday it spiked up beyond the medium line. Right? Okay, on volume, on decent volume on that. Right? So I was looking around, I was like, oh, right, I'm looking for this to repeat itself. I'm looking for that to repeat itself. That's what I'm looking for. So I go into the intraday timeline. So I start going into the 4 hours. Right? And you see this spike later on of the day. And then I go into the 1 hours. 1 hour already, definitely. I mean, if the daily cross a medium line, the other ones below definitely have crossed it. Right? Because daily is the last to cross the medium line. Right? So it gapped on the hourly as very clearly, and then do this. Gap on this bar, and it start running. It goes sideways, and then it make new high. Now, but I opened the trade, and I start to continue to compress the timeline. I start looking at the different timeline, the 30 minutes, and start looking at the 15 minutes. And then it was the 5 minutes. That's the lowest time frame I utilize. Yeah. So this is what happens on the 5 minutes. In the morning, it gaps up. Sellers came in, push it down, buyers came back in, bought it back up, false hammer. Right. Nice false hammer formation. And I see it broke up. I was waiting for retracement. I was watching this. I was hoping it test this level. It never did. never test level, and then momentum bar, break this high right here. This is the high. Right, it broke this high. Right, so let's go bar by bar. Right, it opens, gaps up. That's a huge gap. Right, within the next 10 minutes, they saw it back off, and then false hammer formation. And then I marked the high of the day. Eventually, right here, it broke the high of the day. Waiting for entry signal, it start moving. So I'm moving 3 bar, and then I'm like, okay, I'm not gonna chase. I'm wait for it to come back down, and hopefully retest this level and see if I get any false hammer. But this bar it broke up, right? So it broke the second level, intraday. That's when I decided to enter the trade, when it broke up. Came in, false hammer formation right here. Start running up. I'm in good place. And as I said, okay, I can stay with this trade. So I just leave it. So I switch. So I basically I don't need to look at it anymore. Right. Looking at the 15 minutes. Right. Very nice formation. Bought on the broke up. 15 minutes this indecision bar, that was fine because eventually during the afternoon sideways drift came back a little as the seller tried to push it back, and then it brought it back up, and then it went to the next level. So from my level to the next level, I'm in a good place. I know this trade is good. This trade on 15 minutes now is hugging, and it's the top of the Donchian channel. Yeah. Right. So right now, 20 minutes into the market open, first bar, second bar. Right. Also a little heavy on the 15 minutes. Switching to 30 minutes. Right. You have this nice big tail. We might see some selling pressure right now. We see some selling. Bottom market flat. If the bottom market starts ticking up, I expect this to pick up too. So right now it's trading one level above where the level I entered at this point. Staying on the top of Donchian channel on the 1 hour. 4 hours, nice green bar all the way. Bar by bar is green. Going into the daily. Yeah. So I set stop loss below the breakout bar. Profit target, this peak. First profit target. Second profit target will be the previous peak, and then you have the third profit target. Now, this could be turned into a bigger trade in the way I would add position. If this formation continue to go up and break, and then it retrace, I will buy on a false hammer. I'll buy the second level. In that sense, that's the trend following play. These is potentially where you go for the big bucks, the home runs, in actuality. That's the ideal situation. That's I'm looking for. Right? Continuation of this trend. It can go sideways a bit, start trading in this area. You can even test below this, below the medium Donchian line. That's fine. So it depends. Now 1, 2, 3, 4, 5. One more bar up would be good, or 7 bar somehow. Right, so I'm looking for 2 more, and then see if we can make a run in the next week or so to this peak of this trend. So this is crucial how it's going to trade. It's going to continue to stay above the medium Donchian line, the yellow line. That would be ideal. Right. So for now, unless it breaks down below, I have an initial stop loss here right now. But it depends. If it start moving up more, I'm going to widen my stop loss. Right now, it's still early for the trade to tell what they want to do. But the daily is holding up, and then the intraday, we will have to wait and see. But this is a level 2 trade. This is of a trend following trade using Donchian channel. Now, there's a very famous trader called, his name is Larry Williams. He turned $10,000 into $1 million using basically trend following technique on. He has a book, and this is the technique he used basically. The Donchian channel, the ATR. Also, there's a Williams indicator that will introduce as we further develop our trading boxes, toolboxes, and trading techniques. Right? And piece by piece, we'll add all these moving tools, all these tools, right, into our arsenal to become better market speculator, basically. Yeah. So this is a perfect fine example, a live trading example of how to run trend following techniques on back of what we already learned, what I use. Right? But this is how I bought the stock. I didn't use option play on this. I want to demonstrate differently on trading this. Wow, the false hammer and stuff like that. If I have a false hammer, I will also sell the option and also add the stock to it. In that sense. So yeah, it's kind of a double down too. You think about it, if gold comes in, right? But my option, if I use an option play, I'm looking for 80%, 85% probability chance of winning. Wow, this is a very different ballgame. This is where your winning percentage is a little, I would say 60-40, 65-70 sometimes. Right now it's like 75. It changed all the time. Right now, yeah. But if it start coming in, then it's a different story. Then right. So I cannot. It's a different probability game when you do trend following. Most of the time, you take small losses. You have to. I mean, get out and then reestablish and get back in again. Jump back in. You do a lot of this. You can get chopped up in actuality. Like here, you got to get out. Actually, you didn't. You will hold this on to the next level. And then you probably will get out and take profit here, the last profit line, once it's break up like that and make to the next level. But right now, intraday is doing this. But I wanted to develop. I wanted to see it's going to give me a few more green bar and gun for the high. Gun for the high. That would be great. That would be great. And then I decide, do I add? On trend following is, I want to add to my positions. I want to add to the trend. Every level, make new level pullback, I want to add here. Make new level pullback, I want to add here. I want to add. Right? So you compound up. Kind of like long-term investing. That's what trend following is. When you long-term investing, you're trend following basically. You turn it into just a technical analysis, pure chart perspective. You're trend following when you long-term investing. You buy on the low, buy on the pullback. Yeah. And that's how you compound up and make a lot of money. But you got to be careful, because if the trend reversal, that can hurt a lot too, because you're gonna have to end up from a profit into a loss in that sense. Right? Like Neo, Lee, those guys. Yeah. So you want to stay with the bigger established name, and you latch on to these month-long or even year-long trend. Right? So right now, like these guys, Apple, if you latch on from the beginning of the year, you gain all this, and you add on every level until, look at this. If you use the Donchian channel on Apple from the trend and the breakout, there's several times to go below the medium line. So you have the first move, pull back, second move, and then you pull back again. So here's the thing, if you really look at it. Pick a trend, pull back. Break up, you bought, pull back. Alright. But if you set your stop loss too tight, you're going to get whipped out. Right. So that's the bar. That's how you can set it here or here. If you set it here, then you never come back. You will stay with the trend in that sense. So you really have to think thoroughly, where's your stop loss when you're doing trend following. When you put it too tight, you're gonna get spooked out. Put it too loose, you're gonna have to take large losses when it comes back in too. So you have to set your risk tolerance correctly. Ideally is actually always the previous low, that's your exit. And yes, you bought on the breakout over here when you break, right? Or even you bought here. So this is the setup. Let's talk about the setup first on the Donchian channel play. Now, although we have perfect information on this, first you look for a trend, establish a trend, right? The whole trading action will stay above the medium line, this orange line, until it do a retracement. Now you're going to start looking for false hammer. Okay, no false hammer never take place. I don't see any buy comes in. But what you're waiting for is for it to break above the medium line and back into bull territory. Donchian channel, it's volatility based and divide into two sections: the top section and the bottom section. The top section is bull territories, bottom section is bad territories. It's just a naming convention. When it break back down into retracement back to bad territories on a bull trend, you wait for it to cross back up, and then you buy the breakup. And you set stop loss on previous low. And you're gonna stay with it. You're gonna stay with it, and you're looking to add the position. You're gonna add when it approach back or break down below again on the retracement. You're looking false hammer again. This is why I teach false hammer technique setup first. You have to be very comfortable to identify and see buyer comes in. I don't see any false hammer, didn't add anything. It didn't break back below. It touched, break up. So you can pay the break up. Right. So we're at here on this example. On the break up, you buy on the next high. Right. That's the first place you bought. What I bought is right on this bar on the breakout. And you set the stop loss previous low, pivot low. You stay with this as long as it doesn't break below here. Break below the previous lows. This is your stop loss. Right. So we'll have that in place. Right. So that I'm trying to fix the it's slightly slanted because I didn't hold down shift. Okay, there we go. Alright, so enter here. There's the entries. I want to mark your first. I want to look for number one. Oh, anyway, let's do that. I always mark it. Right. You can stay with the trade as long as they're break low. You look for places to add. Now you make a new high. It broke up to the next level. If you happen to be there, right? So let's make the high around this level. Okay. This is resistance. This is support from the first trade. Broke below, you have to get out. This resistance broke, you buy on this bar. Add another one on this bar. Buy in this bar. Right here. Let it do its thing. Alright. And where do you set the stop loss? It's gonna get Y. You can set it previous low here, or just the first stop loss. But in this case, it just started running. Alright, so you start running, pull back, run again. Well, you can buy here again. Alright, that's the next resistance level, but it may be a little too early. Just wait. Okay, pull back. Alright, so you set, okay, let's make this previous high the next breakout. Alright. Break up here, never break up, pull back, broke here, buy again here, buy again here, not here, This is where it broke on this bar right here. Buy another one. Okay. Now you have spent all your 3 bullets basically. You got 3 shots and you buy it all, and then you just hold. Hold until when? Hold until it touch or penetrate below the medium line. Nothing. Wow. Until this bar basically. This is where you got out. This is where you're all happy. Right here. Right here. Okay. Just using the Donchian channel on the trend. This is a perfect example. You bought on 3 level, you triple up, not triple down, and you ride this all the way here. Okay, so your average cost will be probably 152 around this price point, 152, and you ride all the way to 190. 40 points ride. A 20% gain on the overall stock, and you triple up. Makes a lot of money. That's why trend following makes a lot of money. It's like long-term investing. You buy the pullback, you look for the pullback to buy and then break out. Pullback, you don't see it to buy, then we buy the breakout. Right? And some people will go 4 or 5 times and continue to compound up until you do one of these. This is a very powerful technique if you really think about it. Of course, if it's trend forming, yes, a long-term trend, wow, you make so much money. And that's how you turn 1,000 into 10,000, 10,000s into 100,000s, 100,000 into millions. Think about this. Let it sink in. This is how you, from very low, slowly roll your snowball up, right? From thousands to 10,000, 10,000 to million to make yourself a millionaire. And then you can even go multi-millionaire and you become ultra wealthy. Let this sink in. This is how you will become ultra wealthy. Of course, you're going to have a lot of false signal to a lot of false trade where this doesn't happen. But when this happens, you're going to chase every step. You're going to keep adding to your winning trade. You always add to the winners. Right. Meanwhile, when option play, a lot of time, you roll the trade, you add to the losers. That's a different game. Yes, you have every very high probability of winning, but your losses are a lot bigger. Think about that. Those are your practice. You feel good because you make more winning. So it doesn't drag your trading psychologically drag your emotional down. After you do that, you will think about, okay, I need to go to the next level. What's the next level? Level 2, right here, trend following. And I just introduce you to this, and hopefully over time you're gonna make yourself either multi-millionaire or even ultra wealthy, or live a very good life, and then you can contribute back to make the society, make the world a better place. So you don't have to spend your life laboring and do things that make the world a better place. Now that you have the wealth, the resource, now you go out there, it's helping other people. And that's what I want you to do. I want you to make yourself financially stable so you can choose a life, better life for yourself and better life for everyone around you. When you don't have to worry about making ends meet, when you don't have to worry about all the monetary problems, now you can think about and project yourself out there and help other people make the world a much better place. And that's the meaning of life. And hopefully I can be part of that to help you to do that. Yes, the trading path is very lonely. Making money is very lonely. Become financially stable, financially wealthy is a very lonely path. You're on your own. Yeah, Charlie. I provide you the thoughts, the tools, and you have to develop the techniques yourself. Fine. It's going to take time. It's not something overnight. It might take years to decades. But eventually you will get there. Just never give up and never back down. Keep coming back to it. Sometimes you're going to get beat up trading. Okay, take a break. And then eventually come back to it. Yeah. And yeah, I take a lot of break in between. Yeah. And for many personal reason, whatever reason, and I always come back. Always eventually, like right now. I'm glad I can upload this video to help you, to help people who are seeking this path, a higher path, to make the world a better place, to make everybody better, to make, you know. So anyway, so that's the basic of trend following using a Donchian channel. Right. This is pointed by Larry Williams again. This is not something I created or invented. There's nothing new under the sky in actuality. Yeah, I'm just applying what makes sense to me, and their line of thought is in line with my line of thought, and then I will utilize the same tools and technique. Right? It's like you're a race car driver. The engine is all the same, be it your Honda, your Mercedes, your Formula. It's the same, pretty much same technology. Yes, there might be a little edge in between, a little new technology that they are seeking, but it's still an engine. We all run on an engine of Formula ways. Right? There's no difference, much difference between engine A and engine B. It's always trading. So everything under the sky, everything in this world is that. Is how you utilize your gas pedal, your brake, your steering wheel, how you judge all these driving tools. And in trading, there's a lot of indicators. What works for you? What makes sense to you? Start with moving average. Is a lagging indicator that give you pictures of how things are going, what most people are looking, and then you add the tools. And that's why on level 1, I'm using trying to get here. Okay, we go. Yeah. Over here, it's all moving average and MACD, which is also a moving average conversion diversion. If you look at XLE, it broke up above the 21-day moving average. So I didn't find false hammer. This is a turnaround point, and then it broke up, and this is the buying bar. That's what I did yesterday. I bought somewhere here when it broke up above the turnaround point. Right, on top of this nice trend. Trying to find my regression trend. Say stuff from here. That's the bottom kind of there. All the way to here. Yeah. Now I have a nice regression channel, right? It broke down below, and then now it's coming back. You can go double bottom or do other things. But right now, the momentum, everything's on upside. The only thing is the MACD on daily, yeah. That signifies what? A signifier, because let's make a new peak. The instrument, XLE, make a new high, but the MACD, which is more momentum indicator, make a low peak. So that signifies a turnaround, and it did. It turned. Now it's turning again. Look, it's turning. MACD moving average are lagging in that. Look, if I wait for the crossover to trade, it'll be up here already. So I use a different indicator, different technique to enhance this. So instead of just looking for false hammer, looking for these turnaround point, I want something that give me a more sooner indication of the trades. And so, yeah, I have this. And so, I have this Donchian channel, my level 2 for trend following trade. Yeah. Oh, this Apple. Now look, continue to look watching Apple. The trend is kind of broken already. It turned around. Right. That's Apple. XLE is the one that we're looking at. That's the trade right now. It's still intact. The whole trend is still intact. You can draw a very nice trend line, support line, around like this. Right. 4. Yeah. More aggressive or less aggressive? You better pick. Very aggressive. As long as it hugged this line, hey. You see the Donchian channel stay above this line? Now you see, if you're a trend line, it's the same thing of looking at the Donchian channel, the medium line is above. You see how they coincident indicator or coincide with each other. Right? So that's a nice upline. 45 degree, of course. If you jack it out, become 35 degree, you compress it, right? So that degree doesn't matter to tell you what I'm trying to say is. And I have decent volume on this bar. If it's a light volume, you gotta question it. Decent volume, you said it too. So that's good. So this, although it broke here, I can do this. Yeah. 3.1, 2 and 3, touching 3 low. That's good. Yeah. Leave this. As long as tray above this, above the Donchian channel, stay with the tray. So I'm looking to add. I'm looking to add to this. Yeah, Charlie. It could be a much bigger trend. Of course, this is energy, so who knows, right? But it could be much bigger trend fundamentally. If you clear this top, then it's have this top next. If you clear this top, of course, that's always. Then, yeah, but right now, yes, bullish. Potential stop loss here, or even take it down here. That is the absolute stop loss right here. Absolute stop loss below this line. Okay. Absolute support. There we go. We're clear. Absolute support, potential support. Yeah. I mean, I have my orders out there, but I'm gonna take it off. It depends. Depends on how I trade. I want to see a trade up or even just sideways right now. That's fine. Yeah, just holding up. If it comes in, I want to see buyers. Eventually bounce off the channel, bounce off that trend line. That's good. I just want to see buyers are holding up the instrument, holding up this. And then you can stay with this. You can stay with it for as long as the buyers are there, holding it up above the Donchian channel trend line, above the trend line. Right? And you're looking to add. You're looking to every time it come back and touch, every time it come back below, you're looking to add to these. Ideally to add instead of the breakout. Because it's better price to add on the pullback than adding on a breakup. But sometimes you don't get a nice pullback, then you just go over the breakup. But you start with the daily, and then you go inside a different time frame. Right? Review this video. We're going to do this a lot when I see the trend formation. Right? We're going to combine the level 1 false hammer into the level 2. Right? Donchian channel. Yeah, that's going to be a lot more to add later on, and then for different situation. But mainly, I'm a trend follower. Matter of fact, I'm a long-term trend follower. That's why I invest. And that's where the big monies are made, where real money are made. Okay, that's about it. Oh, I should cover a little looking at the market today. Since this is live market. False hammer. Look at this. False hammer come up, right? But never make it a new high. False hammer again. This is promising, right? So if I'm going to trade this, right, it has either clear this, or I don't see this. This is a volume. This is good volume. I want to see a volume spike. Wow. But that volume spike on the red is not good. This is, although there's false hammer now, also adding to the picture right now is volume. Daily volume. I don't look at intraday volume. I look at daily volume. Yeah, intraday volume can matter too, but the daily volume is where the big ones are. I want to see a spike in volume where there's infighting, and then dry back out on the false hammer. Yeah, the problem with these is the momentum has fizzled, has died down. The bull market is a little directionless right now. There's no bullhorn, sound of the bullhorn. Everybody doesn't want to pile in and buy. Ideally, that's what you want when you go long. Right? When monies are piling in. And so they all kind of like start going sideways, head and shoulder, forming reversals, retracement, double top on this guy, 1 and 2 these top, double top, trend, double top, come back down. Never managed to broke this. And then it gap down. God, I hate earning. It drove it all the way up second time. It could broke up if earning was good, and then boom, gap down like that. Yeah, that's the danger of selling options. It do this thing. It's an option seller. Yeah, that's why you can incur big losses on selling options, and you have no choice to eat it. You might roll, but then it do this. Ooh, more pain. Yeah. So as I say, you have to look and read the market, read the bar, read the turnaround point retracement. Right? Even before this, okay, let's take this for example, Oracle. So it make a nice trend, uptrend, and then it go really exponential, rips up, and then right back down. Right? Finally, it's trading below the Donchian channel, but then make another attempt to make new high, and if this is a breakup bar, so the next bar that make new high, you can go in, but it never happened. It closed down below, so it didn't trigger entry signal. Right? There's two types of entry signal on Donchian channel. When it goes below the medium line and eventually turn around and then it break up above the Donchian line, right, on the uptrend, you buy on the bar when it make new high on this. The second entry signal is when it break above the previous peak, the breakout, and then you buy the new high on the following breakout bar. Right? I've covered this on the breakout, so the breakout I covered already. Look back in one of my video how the breakout setup. Basically, you break up, and the next bar that make new high, you buy that. On the false hammer, you look for false hammer. On the next bar that go higher than false hammer, you buy that. If not, then you wait for Donchian channel break, and then the bar that make new high. But it didn't on this case. Right? Red bar came in and break back below again. Tiny little false hammer, you could have bought here. You might take this trade, might not take this trade, depend on how aggressive you are. If you took this trade, so around a little, your stop loss will be below this false hammer bar. Your first stop is maybe here, or you're looking to add, so you hold and then it break down, and then you have to take a loss. This is the nature of trend following. For winning trade, it might gap like that on the earning, on following earning, on earning day, yeah, following the earning day, it does this. So it happens. So right now, that whole trend following trade has been destroyed. It gap and below, and you have to trigger all your stop loss, and you got out somewhere around here. So yes, it can get very painful because you will have make money if you get out here. Now the wise thing to do is actually, if you're in the money, you look at, oh my God, right? It's an earning day, next day, right here, the day before earning, you could use option to protect yourself. Right? You can buy put options, offset it, or even just close out the position, see how it trade, and then reestablish post earning. How about that? Close the trade before earnings, and then the day after earning, you can decide, wow, lucky I closed it out. So keep this in mind. When earning comes in, you might not want to hold through earnings. Yes, you might ramp up and you miss all this profit. Well, you might gap down and you miss, and you save yourself from all these losses too. Or even hold a smaller position. You have a full position now, you want to scale out some of it, and then go back in later. You can always go back in. Post earning. Yes, you're going to miss that nice big move, but hey, you prevent yourself from getting destroyed on a gap down like that. So keep that in mind. You have a position and earnings is coming up. When you're trading individual stocks, you might want to lighten the load, or even close out the position or hedge before earnings, and then reestablish the position post earning. Keep this in mind. That's a very important point, very important technique, advice I will tell you, because this happened. This could happen. You have bought a put, hey, then you did not re-raise all your profit at least, or even just break even. These are taking a loss. If you did not lighten the load, did not completely close up your position before earnings. So keep that in mind. Okay, so that's about it for today. Yeah. We went into my Donchian channel trade. We talk about earnings, how to protect yourself, pre-earning. And this is a very important episode, I have to say. It's very important to review this, and I will continue to talk about these and reinforce these trading ideas, trading techniques, and to make yourself a much better market speculator, market operator, and to build my own financial empire. Okay, that's it for today. Thanks for watching, and if anything, I will post more. Otherwise, see everybody tomorrow. Have a good day.